Hello, I'm Dan Greve. I'm the CFO of Profectus Livestock. Welcome to Profectus's podcast series, Head of the Herd. And today we're talking about financing and banker relations for your operation. Happy to be joined by Jason Schutz with United Prairie Bank. Looking forward to getting your insight today, Jason, on
No problem.
producer financing and having a good relationship with your banker. Why don't you give a little background about yourself and United Prairie?
Jason Schutz, been at United Prairie Bank for 25 years. Went to college at Minnesota State University, Mankato. Got into insurance after that. I have a finance degree. Shortly thereafter, I got into the bank job and started over in Round Lake, Minnesota, and moved over to Worthington here when I had an opportunity. Which again, it's my hometown, and I also farm up by Reading, Minnesota. Grain operation, corn and soybeans. And been doing that since 2006. Been at the bank for 25 years. I've seen a lot. It's been a lot of corn and soybean operators. We've seen cattle. We've had pigs. Now a lot of that's over to the custom side, so that's changed quite a bit. The dollar amounts have become quite large. Used to 250,000 to 500,000 was pretty normal for loan size. Now you're talking $1 million plus for operating notes.
Right. Give us a little background on United Prairie as the bank and kind of what area that they work in. And that
kind of United Prairie Bank is owned by the Sneer family. They have 10 locations, primarily Southwest Minnesota. Spicer, Minnesota would be the farthest north. They have their headquarters over in Mankato. And they have Otana way over to the east in Waseca, and then we're just kind of right in this area, Wyndham, Mountain Lake, New Ulm.
What, as far as like your loan volume, and I'm assuming agriculture and producer and ag related financing is a big part of your loan portfolio?
Yes. The ag is probably in the 60 to 70% range. You know, this area this is farm country here, so you gotta. That's just what it is.
Yeah. Typically, we've talked a lot in Profectus about a producer and having their board of advisors or board of directors, and who's the right players and who needs to be part of the team. And obviously, financing, unless you're independently wealthy and don't need a bank,
right,
which is very, very few. Having a strong banking relationship is super important. So, what are a couple things that you think are important to building that relationship and developing that over time?
Probably number one right out of the gate is just overall management ability. Paying attention to the numbers, paying attention to the small details. The numbers, like as we said earlier here, the numbers have gotten so large that you can't just put it on the back burner and not worry about it. You're talking about too much money here, and the way cattle has gone, the grain farming, the way that's going with the inputs and the costs. You look at the cattle with just the cost of the animal, the day-old calves, anywhere from $1,000 to $1,500 right away.
Right.
I mean, that's a big number. You really got to pay attention right out of the gate. You got to know your numbers, and you got to keep track of everything. And that's a big deal to the bank. It's a bigger deal to your operation for you to be successful.
To stay on top of it, it's not just a like once a quarter kind of balance your checkbook
no.
and really even I call it checkbook accounting.
Yeah,
because it's really much more than that. So what have you seen as far as like tools that producers are using, like QuickBooks or some sort of accounting?
Yeah, there's QuickBooks out there. There's the really well built Microsoft Excel files that have been put together by some of the extension offices. Two that we use a lot are University of Minnesota, and then we also use one out of Illinois. But then just maybe even hiring an ag consultant. You look at some of the grain farmers out there, they're using Central for their agronomy practices. Same thing with cattle, same thing with pigs. You could probably go find that professional and see what they have to say. And sure, there's going to be a cost to it, but if your numbers get better, and like talking to you guys, Profectus, bringing in the nutrition value and all that stuff, the animal grows better, faster, the numbers get better financially and everything.
What, as a producer, if they've either have gone through a transition in the lender, maybe the lender they've been working with retired or whatever, or they're just maybe looking for something new, what should a producer be looking for in the lender, both in the person like yourself that's the relationship manager, but then also just the bank as a whole?
Yeah, I mean, it's awesome if you have that referral through a friend or family member or an associate. But you still got to go off the first handshake and the first time you meet them. If
Right.
hopefully you kick it off right away.
Yep.
And you can both communicate well. That's the key. And not only the lender has to do a nice job of communicating, the customer or the producer has to do a good job of communicating also, because if there's any roadblocks in the middle there, I think it just becomes very difficult for both parties involved to make any progress in the financial world.
Any tips as far as there's lots of different banks out there, and they're always looking for loan growth, and some are maybe have a little bit of ag but not specialize in it, versus somebody like United Prairie that is really involved.
Yeah.
Any other things to be looking out there?
Well, you definitely don't want to be going to a lender that's probably newer at
Yep.
it, unless they're getting help and they can do the talk and do the walk. But you got to go where there's some experience and they've had their feet on the ground for sure a solid 5 years. I would hope 10 would be ideal. And then they're getting the right information and pointing in the right direction. When you have a new producer come in, or even an existing producer come in, because you don't know each other probably very well, the first year, maybe 2, maybe 3, it's going to be more visits, probably quarterly, maybe even monthly, semi-annual, or an annual is going to happen regardless of who you are. That we always are updating our balance sheets and cash flows and projections and all that stuff, even pulling credit reports once a year. Banks have to do it. We have to safeguard ourselves.
So that's a nice transition to kind of the next topic I wanted to cover is, as you are preparing, as a producer's preparing to meet with you, obviously a new relationship is probably a little different than existing, but what are some things that you like to see them come to the table, come to the office with, information?
Yeah, that's a great question.
Yeah.
So typically, especially if you're new, when you get started, we're going to need 3 years of tax returns, full tax returns, not just a Schedule F.
Yeah.
And then we're going to need detailed balance sheets with the summary page and then all the schedules. And we like to have 3 years of that. And then we pull the credit report. We pull a UCC search and we do our background check. And it's good for both of us. You bring that stuff in. We take care of our due diligence. It's one of those deals where it's trust but verify.
Right.
And you hope everything works out and the numbers all jive and you can come out with a plan and then move forward with the financing.
Yeah. So as being a CFO, I prepare financials a lot. So, and you said, having a good balance sheet and those kind of things. If I was sitting in your shoes, yes, you can see I've got inventory of $1 million or whatever.
Right.
But I would think that having the details of what makes up the calculation into that $1 million, and you can it and understand it, it's probably pretty important.
It's very important.
Yep.
So on a balance sheet, if we think about one of the schedules and we look at cattle,
Yep.
we need to know the bulls, the cows, the calves, the weights, what approximate value is for each, all the equipment that goes into that operation. We like to have model and serial numbers.
Sure.
That's not always the thing that we need right away. We can get that stuff later. But we need to know what we all have for the operation so that we can look at if we have to go, if in the future needs, is there going to be capital purchases and things like that.
Right.
But all that detail, that's just one idea. Even corn and soybeans, we need the bushels, we need where they're located. Is it at an elevator? Is it in bin 1, 2, or 3? Soybeans, same thing. But when you have all that information, it's already on your documents that you bring into me, that the banker feels more at ease is the best way to say it, because he sees that you have the detail instead of just putting down 100,000 bushels of this, 100,000 bushels of that. I have 1,000 head of cattle, but no detail. That gets difficult. So more detail is always better, and bankers like the detail. They have to have it. We have to have it for compliance and regulation.
Right.
So,
beyond the balance sheet, how about like cash flows and budgets and those kind of things? What do you like to see in a new relationship, and then more on the existing side? What do you like to see from your producers?
Yeah, on the cash flow side, it used to be 1.25 to 1, meaning for every dollar you owed, you had 25 cents left over. Now with today's economics, it seems like we need to get above 1.5, maybe 1.75. 2 is great.
Sure.
I mean, I brought a chart here today that if I just pull out super fast, and we jump to it, first thing you look at, 2.0 and higher, or 2 to 1 is in the strong category.
Okay.
Well, I think all your producers, my producers, would want to be in the strong category. So when the bumps in the road come, because there's always peaks and valleys in this business, and we have to be ready for the valley. And
Absolutely.
the stronger that cash flow is, the stronger your current ratio is, the working capital, it's a big deal. It'll get you through the tough times.
Yeah. Kind of wrapping on all together, having a really strong position plus having good handle on your numbers gives you ease. It also gives not only you, but the bank in general ease. I would imagine you probably take some of that into consideration when you're pricing, what the interest rates you're going to charge and that kind of thing.
That's a good point to bring up. Yes. So the pricing, a lot of guys come in, they sit down, the first thing they want to know is, how fast can I get the loan and what's the interest rate going to be? It might be interest rate first, then how fast I can get the loan. But, I like to talk about interest probably dead last. There's no reason for me to give an interest rate until I know what the business is, what kind of management system do we have, what kind of operation overall are we running. And when we figure that out, we can put together a proposal after receiving the information that we just talked about, the 3 years of financials, the 3 years of tax returns. And, we can go through the analysis pretty quick if we have the detail we need. There might be a little back and forth, but then we can put together that proposal and we can come back to you and we can give you options. Because it's not always one size fits all. Depending on the operation, depending on what kind of loan we're looking at, you're going to have different terms and availability with the money, and the pricing models are different. Typically, your prime right now is running at 7.25. A lot of guys are going to be tied to that, or they're going to be tied to an in-house rate, whatever the bank has. But it's different for every lending institution.
Right. So as you underwrite a loan, it's not just Jason looking at the numbers. I think most banks now have some sort of analyst team and that kind of thing.
We have a credit department that is totally devoted on rechecking our numbers, if you want to say. We can put in the detail, but a lot of times for the spreads and all that, we're going to send it to them. They're going to plug everything into the programs, and they do a really good job of doing that. They send the information back to us. I take a look at it. Someone else is taking a look at it. You got probably 2, 3, 4 sets of eyes looking at it.
Sure.
Which in my mind, that's a good thing. So we don't miss something.
Absolutely.
Especially if we're starting a new relationship, we want to get started on the right foot. So.
We touched a little bit about it. Some of the kind of criteria they're looking at. I think you talked about what you consider, a strong or a good credit, and some of those kind of things. Cash flow is important. Collateral. What are you looking for in collateral for both? Probably more operating type things, and then also either equipment purchases or real estate purchases, that kind of thing.
Yeah, I mean it's tough to give an exact loan to value. The collateral position. So basically, it's like example. You go to buy a car, they typically want 15 to 20% down.
Right.
I would say in the livestock sector, we're looking more for that 70%, 30% down.
Sure.
But we can live with 80 if we're a new producer, but we have a nice plan put together. We can live with that as long as we're improving that collateral position as we move forward.
Yep.
The banks, obviously, we like to see 50%. It's awesome.
Right.
That's great.
Yeah.
Love it. But again, you get back to the numbers when we're talking about how much the numbers have increased. Right. Cattle especially, this is moving fast for the cattle guys. This has been, we're here, now we're here, now we're here.
Right.
It keeps going up. The dollars are so big that not just us, other lending institutions, the talk with other banks, they're asking for additional collateral. It's not just the cattle.
Sure.
It's going to be the cattle plus land, maybe machinery and equipment, maybe something else.
Sure.
Maybe extra guarantors signing.
Okay.
Could be something like that.
Sure.
Because the dollars are just getting so big.
Right. I think, and this was even before the big run up. I had done just kind of figured on it. If you had 1,000 head of cattle on feed, just the sheer numbers, it was like another $1 million in costs, between purchase and feed costs and those kind of things.
Yes.
So luckily, maybe feeds come down a little bit, but obviously the purchase price hasn't for sure. You talked a little bit about plan. So obviously, plan being if you're raising your own feedstuffs and those kind of things, or if you're purchasing. But talk a little bit about how you view risk management and some of those kind of things.
Very important. So 2 different examples. Livestock producers have their risk management tools that they can use. There's insurance different insurances out there. There's the feeder insurance. Don't know if I'm saying that 100% properly with that terminology, but there's insurance out there. It's almost like crop insurance,
Right.
where they can put a floor on some of their costs and things like that. Also, just having good insurance on your animals, all your equipment, all that stuff, just like anyone else would on their house or their home. Over to the grain side, crop insurance, with what they have out there now, they have the ECO. That's really popular this year because the subsidy went up on it. And then just running the revenue protection policies for crop insurance it helps. It's not going to cover everything, but it's putting a floor out there saying this is my bottom,
Right.
And then you can work up from there and figure out the rest. But
Yep.
risk management is huge. You got to, any of those tools that they have out there, you have to take advantage of.
Yeah, I've heard it explained as in some cases in a rising you're protecting some profit, but in other cases where margins are super thin, you're preserving equity.
Correct.
Is the big
Correct.
thing around
Yep.
risk management.
Yep.
So anybody that's been in ag for a number of years,
Yes.
you're going to have some of those great years, and then there's other years there it's really
and that goes back to that peak and valley. That's what this business is. Ag is so. I mean, there's been times where it's a nice ride for 3 to 5 years, but it's like anything. There's going to be some bumps.
Right.
So
right. So we talked a little bit about you start the relationship, build the have your analysts and those kind of things. Now you've packaged up the loan request. Walk me through a little bit about what's the next steps inside the bank, a loan committee or those kind of things.
Yeah. So after we've packaged up the request, I've come back to the producer or the borrower, however you want to say it. We sit down and we go through options, and we take a look at what will fit for that person and or producer, and then if we come to an agreement of like, yes, we like this and the bank likes this, and then typically, and it's not always this order, but this would be relatively close. I'm going to go back to our credit committee, and I'm going to present it, and depending on the dollar amount, different levels. The higher the dollar amount, the more likely it is to go to a credit review committee. It's going to get reviewed, and it's either going to get approved or it's going to get disapproved.
Sure.
So
you've been at this long enough, you kind of know what will work,
yes.
what will pass and not pass at the credit committee, and that's part of that whole
Yep.
dialogue and conversation ahead of time.
Yep. And
structure and things. Yep.
So I've been doing this for 25 years. Started as just a regular junior loan officer, moved up to the next level, the intermediate or business banker level. Now I'm a market president since 2012. I have another guy in the office that's a market president also, so we're running a couple locations and doing multiple tasks. But we both have a lot of experience. I think between the two of us, we're pushing 40 to 50 years of experience, and we're bouncing ideas and things off each other all the time. But a lot of times we go through basically the 5 C's of credit real quick with an existing or a new customer, and we explain to them what we're looking for. And again, that's where I pull out these charts that I have. This one here is a farm business management from southern Minnesota. It's the annual report. You can peel through this, and it's going to tell you where your ratios are. If you know them, you should. And it's going to give you a farm finance scorecard. And you can very quickly peel through that and see where you sit and how do we improve or not improve. But I think at the end of the day, we do a very good job of just keeping it simple.
Sure.
We don't try to go into a dictionary that they don't understand.
Right.
I don't want to do that either. Keep it efficient, keep it simple.
That obviously that is a great process, and I totally agree with that process.
Yeah.
And we've done it as we've worked through business financing, those kind of things. So, but it's not an overnight process either. So kind of I'm assuming sometimes you might get somebody like, oh, I need money like tomorrow kind of thing. How do you handle that, and what help the viewers kind of set what expectations would be a realistic timeline?
So when it comes to your basic consumer loans, that is realistic. You can probably get that done in less than 5 days. The days of getting the money because the dollars are so big, the next day is just about impossible. Right. New customer, you're talking, I always say 45 days.
Sure.
And existing customers, that's different because we have all their information. And if it's up to date and up to speed, and they've stayed in good communication, which most do, they can come in. We can get something done for them in less than 5 days. We can, unless it's a whole new project and it's a really big dollar amount. But now, if you're coming in just for maybe a capital purchase of $250,000 or less, usually not a big deal.
Yep.
We can get that done pretty quick.
So now you've booked the loan and those kind of things. Having been in banking, I know there's another set of oversight beyond just your local internal.
Right.
Just not go into great detail, but just a little bit about how are banks typically. What's the oversight of banks, and what are regulators?
Well, the regulators are coming in and they're randomly pulling files. I'm not sure how exactly they do it, but it seems like it's always maybe the bigger ones, and then some of the smaller ones. It's probably a random pick, and they probably look at some risk rating charts, and that's the bank is doing a risk rating on every customer. We're looking at your financials. We're looking at the tax return side. We're looking at your character, management ability, and you get thrown into a diagram of sort that spits out a number.
Yep.
And that's a risk rating. So
Sure.
Whether they're doing that or not, I'm not sure. But you have FDIC coming in, you have the state examiners coming in, and then we have our own compliance department.
Sure.
And hopefully our own compliance department is catching stuff before
Right.
before the real exams come. But that's the reason the banks do what they have to do. We're regulated. We have to follow rules and the regs set out by FDIC, the state, the Federal Reserve. We have rules to follow. So other places can be a little different. You got a credit union, or you got Compeer or Farm Credit Services. They still have regulations, but it's just a different playing field.
Sure. So. Yep. So now, once the relationship starts, or it's an existing relationship, I think you mentioned it earlier about kind of that ongoing relationship throughout the year. What are you looking for? If you're out doing farm visits, what do you, when you're on the farm, what are you looking for beyond just a handshake and how's the weather?
Yeah, I mean, honestly, when you show up to a farm, and I don't mean this mean at all or anything, but it's no different than when you show up to someone's house. Things detailed, clean, organized, put in their places. That makes a difference. It does for me anyway, and I think it does for probably most lenders or any consultants that are going to be working with you. Because a lot of times that's going to give them a general idea of them. How do they manage? Is this how they manage? Well, I'm not saying it has to be immaculate,
right?
But it matters how your yard looks. It matters how your crops look. It matters how your livestock looks.
Sure.
If things aren't being taken care of there, how are they going to take care of the books?
Right. Earlier, you talked about how you're pulling information from like tax returns and helping the producers put their balance sheets and things together. Obviously, depending on the operation, those kind of things, a lot of times we all know that people play the tax deferment game and that kind of thing. So tax, living by the tax return net income numbers, not the right number or the real number. Talk a little bit about that and the importance.
That's why we ask. I mean, realistically, I like to have 5 years of tax returns because then we can spread it.
Sure.
And we can line up all 5 years and we can see what they're doing exactly, whether that is deferring it, doing the prepaids. So they're taking all the expenses because they have, and once you start this game, you're on that cycle. So very seldom, I mean, it happens, but most guys are deferring and doing prepaids.
Sure.
So when you put all those years together, though, the 3 to 5 year spread, we can see the real number. Because again, we have to look at earnings before interest, tax, depreciation, and amortization. What does that mean for your guys? It means pull out the tax return, talk to your banker or talk to your tax advisor or financial consultant, and find out how much money am I really making. We got to take that bottom number. It might say negative on the net income, but we have to add back in things like the depreciation, the interest. Maybe we got to add back in other income stuff that we're missing there and do a global process of everything that's happening. Maybe the producer that's working with you guys with cattle and borrowing money from me, the spouse or significant other has a off-farm income. We have to bring that money in too to the operation and look at a global picture and see how much money are we totally bringing in so that we can figure out how much do we have for debt obligation, how much do we have for family living.
Sure. Yeah, so family livings, obviously I think over the past decade or two, you know, family livings become probably a bigger obligation for the farm
Yes.
if there's not significant off farm income to help offset that. Maybe talk a little bit about what you see there.
Yeah, it's a number that you hear about it on the news. If you're watching the news, you read it in economic forums, you hear about it, sitting at the coffee shop with your friends.
Mhm.
How much, I don't know, eggs, milk, groceries in general. That one's a hot topic. Has been for sure the last 12 to 18 months. But even before the groceries got expensive, things in general were getting more expensive. If you look at your big ticket items, your real estate taxes, all your insurances, your entertainment stuff. I see a lot of times on the Wall Street Journal, they talk about going to Las Vegas, how
Oh,
things have gotten out of hand. A
right,
cup of coffee costs $15, $20,
right.
ATM fee of $50+. So, I mean, you start looking at how we were doing our entertainment, our vacations, and all that stuff 10 years ago. It was a little easier, it was cheaper. Now, when you look at that, you might have to cut back on a few things on tougher years and not keep having the same thing going with the family living, because it's family living is a big number. It's
Hmm.
big. A family of four for me, I'm going to guess it depends. I mean, everyone can do things a little differently, but you're talking 75 to $100,000
Sure.
for a family of four, and it depends on the age of the kids also. But I was thinking when my kids got older, it was going to get cheaper. That is not what happened.
Right.
Then there was cars involved and car insurance and cell phones. So
Yep.
it is a very big number, and I think it's a number that gets overlooked a lot. I think they go, we go to work, we do the same thing every day. We go to the coffee shop, we go to the donut shop, we go to the sandwich shop, we go out for supper, we go to a movie. Well, there's a cost to doing all that,
Right.
and that cost can be quite large if you're not paying attention.
Yep. We talked about knowing your numbers, what are the true costs of operating those same things. The other thing that's I think is really important for the long term viability of the operation of we talked about the peaks and valleys and those kind of things, but having your debt structured correctly.
Yes.
So talk a little bit about in your mind what's the right way to use operating versus intermediate and long term debt and that kind of thing.
Yeah. So a lot of times, when you and I were talking earlier before we started
Yep.
doing this today, there's some guys where they have a large enough operating note and they haven't used it maybe a whole lot, or they got a lot of room on it. They got credit availability on it. Most guys will give us a call and say, "Hey, is it all right if I put 50 to 100,000? It could be more. It just depends on the item on the operating note. Is that okay? I'm just going to pay on the operating note, and when my money comes in, I'm just going to pay it off." That's fine, as long as when we do your annual review that your current assets are higher than your current liabilities and the numbers
Mhm.
look good. I want you in the strong category before I start saying let's burn cash. We don't want to burn all the cash. Right now, things are expensive. We need as much cash as possible because interest rates are higher, and there's borrowing on the operating note is going to be one of your higher interest rates.
Mhm.
So a lot of times when we get to the end of the year and we start updating the balance sheets, we're going to look at that operating note and say, does it make sense for this small tractor, or maybe some cattle went on there because we didn't put them on a cattle note, or should we move those over to term debt? Again, though, we're going to have term debt obligation
Right.
now.
Right.
Can we afford that in the cash flow? That's something we would look at. Typically, though, if guys have pretty strong working capital, we should be able to fit it in there, unless something in the economics and the money markets are going crazy. But typically, we will work through that.
Sure.
And then just making sure that debt is set up correctly. You don't want to have. I see sometimes the balance sheets come in and we got 10 to 20 loans for machinery and equipment,
Right.
at all different rates, at all different terms. That's going to hurt the cash flow. You got to
Different payments, different times of the year,
Yes,
and
I think
yeah.
a lot of times people are just take a note like that, even whether it's land or that. Look for a cheaper rate, bundle it all together, and good bankers,
Mhm.
good financial advisors can help you with that to figure out how, and it's going to save you money in a payment when you
Right.
consolidate it.
Right.
So
Yep.
it's just being smart with the money. And if you can't figure it out, go get some advice.
And trying to time those payments to when you really have
Well,
income coming in versus
that
a
brings me
payment in the middle of summer when either the crops in the field or the cattle are halfway through their feeding cycle or whatever.
that brings me to a good piece there, because back in the day, probably 10 or 15 years ago, we knew of a banker or two out there that would set up a real estate payment to have the payment come due in summertime. How much money does a grain farmer have in the summertime? Not very much.
Not very much.
So basically what was happening is that payment would come due in the summertime and they had to borrow off their operating note. So they really weren't making any headway on it until their deferred money or grain money came in. That makes no sense.
Right.
You want to have payments set up when the money's coming in so that you don't have to borrow off your operating note or take it from another obligation. That doesn't make sense. Exactly. So it's the correct structure is super important.
Yep. I'm sure you've been in this long enough.
Yeah.
Everything's doesn't always go as planned, and I don't want you to go into any specific details, but I'm sure there's maybe some themes or some things that typically, if either a banking relationship goes bad or a operation goes through some financial struggles, is there any commonality or things that you have seen over the years?
Yeah, it's going to be number one is going to be communication. When I'm the banker and working with the producer or the borrower, and the communication goes not as good as what it should go, that can be. I'm not saying it always is, but that can be a red flag. You can sometimes see it in the financials alone. Usually, we're going to try to point that out. The question is, do they want to try to fix it or do they want to ignore it? Obviously, if they start ignoring it and not doing, keep spending money on family living, maybe buying items that they don't need because they're trying to avoid taxes because they don't want to pay any taxes. Mm-hmm. Some of these guys, and I should back up here a little bit, some of these guys don't want to pay taxes. I mean, none of us want to pay taxes. We all know that, but you can't spend your way out of taxes.
Sure. You
can buy some stuff that you might need. That makes sense. Upgrading where you need to upgrade. But you always have to ask yourself, is that a need or is that a want?
Sure.
It's pretty basic, I think.
Right.
But it's kind of like what your mom and dad might have said to you as a kid. Do you need that sucker, or do you want it? It's just one of those deals where you got to look at that and you have to say, does this make sense? And if it doesn't make sense, you probably shouldn't do it. Mm-hmm. We've seen other things that can get really crazy, and I'm sure you guys people have heard it on the news or read it. Moving grain around, moving machine equipment around, moving livestock around, sending the checks somewhere else, not coming to the bank that has borrowed you the money. Those are huge red flags.
Right.
That's gonna be immediate termination and to stuff that neither party wants to have.
Right.
Because when you start bringing in legal advice, the bills get really large really fast.
Right.
So that makes no sense. And that would be a general warning for everyone out there. No one wants that.
And then when that happens, it just digs that hole that much deeper for that operation to, they have an issue or a problem with United Prairie Bank.
Yep.
To go get financing someplace else.
It can possibly ruin them for forever.
Right.
It truly can. Maybe they can find an out somewhere else in a different location and doing something different. Right. But it really is gonna, if you plan on staying in the same area, every bank's gonna know about it eventually.
Well, just kind of wrapping things up. So 2025 has been in agriculture in general, has seen kind of the peaks and valleys.
Yes.
The cattle market's been really great, lots of profit, but now the replacement cattle are super expensive. The row crops are seeing some challenges on where those commodity prices. What are you seeing? What's the bank here? What are you hearing in ag banking in general? Kind of what's the sentiment out there?
It's barely okay, I would say. Okay. If I'm being honest, it's barely okay. Even if we get really good, I'm hearing some good yields right now. The soybeans, the early varieties are coming out. There's some pretty good yields. But if you sit there and you look at the prices, you're barely getting to break even. Now, there has been a few other payments that have come out this year. You got ECAP, STRN, I believe is what it was called, and the ARC or the PLC. That's bringing in some additional dollars. That's probably just covering family living.
Sure.
Probably $100 an acre. The yields need to be very high because beans are $9.50 to $10 right now, and corn is, depending on where you deliver it again. And this isn't perfect for everybody, but corn just put it around 375 to 4.25.
Yep.
So if you start pulling big bushels, that's great, but those bushels are going to get eaten up pretty quick because the expenses were high this year.
Yep.
And looking at fertilizer and input prices now, it's just the way it is. It's supply and demand. It probably has some stuff possibly to do with the tariffs. I'm not going to say it does because I haven't looked into that enough, but there's no doubt it's got to be affecting it somewhat. But some of the producers have already locked in fertilizer prices or maybe feed costs for their cattle. It's higher.
Yep.
It's anywhere from 5 to 10 to 15 to 20% higher than it was last year.
Yep.
So it's going to put more pressure on next year.
Mm-hmm.
So right now, from my perspective and bank perspectives, it is a challenging time a little bit. We need to watch the numbers, and we got to cross our T's and dot our I's.
So when this podcast comes out, we'll be kind of right in the heart of harvest and that kind of thing. So everybody's going 100 different directions. But what's your advice, in these challenging times, going, wrapping up the year, post-harvest, having those conversations, coming into like renewal season and those kind of things? What's your advice for producers?
Management ability is so important. Know your numbers, know the bushels immediately. I mean, be paying attention to them. Don't just think you maybe did so many bushels per acre. Know exactly what you did. Know what your debt obligations are. Know what your future needs are. Machinery and equipment. Cattle guys, same thing. Looking at how much more am I going to keep the same amount of animals on the yard, or am I going to cut back, or am I going to increase? Do I have the livestock machinery to do what I need to do? Do I have the feed, the vet service, all that stuff? Do I have the nutrition? Make sure you are looking at it right now. Like I said, I know guys get in the combines and they get in the tractors, and we're going to turn on the radio and away we go. But I think you need to be thinking while you're out there, how am I sitting? How am I going to turn out? Good management.
Yeah.
It's very important.
No.
Be proactive. Don't be reactive.
Yeah.
Proactive is way better.
And communication.
Communication.
Yeah.
We're at the end of the day, we're all here to help.
Right.
Profectus is here to help. The extension services, the banks. No one's, communication's huge.
Yep.
Ask the advice.
Right. Thanks for spending some time with me today, Jason. And we'll have Jason's contact info in the information on the podcast if you want to reach out to Jason or anybody at United Prairie. I'm sure they'd be happy to talk to you. So with that, I thank you for taking the time to visit and with us today and here, and see you soon.
Thank you.